Hi everyone, Happy New Year. Good morning, good afternoon. Sorry I haven't streamed in a while. I caught a flu over the holidays. Let's just turn this on. Okay, make sure everything's working. My template got wiped. I was going to start it a bit earlier, but then I had to redo this. Yeah, I'm feeling way better now. I think it was just because of the cold. Gold is actually getting a really good climb. I want to cover this in a bit because I don't know if you guys saw. Did you see where gold stalled? Look at this. Let me try finding my old template. Has it really been that long since I posted to Twitter? Holy. Is this the same template? Yes. I think. I'm trying to find it, but anyway. So we tagged, it was that exact spot, 4,552. 4,552. Hold on. 4,552 and reversing needs to clear there to be on its way to 5K. I have a few templates on this one, but this was kind of like the bigger overhead, and that was the first fib that I had drawn on here. But I do want to look at my other template too, because this one I was manually measuring. So I want to see if there's some alignment with, you see where they stalled the last time? Like right here, when they broke highs. I wanted to kind of see, I'm going to mark these manually. 4,480.6, 4,480.6. Okay, 483.90. So 6.4, I think. Okay. Mark this level on your charts manually, because that's a calculated spot for gold based on where they actually broke. Okay, so whatever that level is, I would mark that manually, because that's what you're gonna have to open above and close above in order to clear this. And then we can measure off the actual high range too, which is, I'm just using the areas that actually occurred when they had this structure break over our 4,426.7 spot, and off 44, what is that, 92.70, 4492.70, or what is this, 4484.50, 4484.50, and then mark this level too. These are going to be the spots that this is going to have to open above and close above in order for gold to clear. And then we'll go back and cover ES real quick, because ES is just, it's just stuck a little bit right now. Okay, so what was that first level? You can mark these on your GC charts. 4564.50. Okay. Okay, so these are the areas that's going to have to open above and clear above in order to get those structure breaks. when using these increments. I never measured last time like off the actual highs, but if you did, are you guys paying attention? If we did, they should align with like you see the day that it broke on the 22nd, which was one of our flip dates. I think I haven't done this yet, but I'm pretty sure if you go back and you align it with these highs here or like these closing sticks, it should have given the range off of what actually occurred. Like these could have been the areas that you, how do I say it, that you targeted, okay? So are you guys paying attention? Look at the candle on the 22nd. Look at the ranges from this candle here, okay? So at a minimum, you would have had to close above 4,454, okay? In terms of like these closing prices, 4,458. And then the high ranges would have hit close to 4,475. What's that last candle here? 4398, 4398, 4398. So yeah, pretty close. Do you see that? Look at how accurate that is, you guys. That's insane. Okay, so if you want to manually mark those levels too, you can. I've been using increments of 83.9 on gold, and it's been insanely accurate. Okay, so, and I still think gold will keep climbing, no problem. But do you see that range? So the only reason why this stalled, it's not because it didn't continue, okay? It's just more of like, you see that? Like that was a perfect close, but it never closed above or like continued. Like we needed to close above, but it did break above. So this is a perfect example of like a break above but failure to close above kind of trade. Okay, so set some alerts on your chart too at those areas. So once gold kind of clears 4 or 5, you can even set it to like 60 just so that you have those alerts set, but I can assure you that that's going to be the range. And if you want to do the same thing, you can go back and measure basically the same areas if you want, like off of, you know, the actual structure breaks, like from here, because then this can kind of give you an idea. And I did go back and took a quick peek just to see like the day that it did clear, like these ranges right here. I don't know if you guys can see that, just to kind of see like these could be like the next areas of like some slight overhead. It's pretty close to like 5,600. Okay, but obviously these spots up here, I'm not going to mark them right now, but you guys can see it like off the current pre-existing highs. We're going to for sure have some overhead around like 4652, 4669, kind of like this range in here. I'm going to leave it blank for now though, because I don't want my gold chart to be too cluttered, but it's just so you guys can see it. So let me save this. And I had my other template, but I don't know why I can't find that one. This fib is also really good if you guys, do you guys want this? This was pretty accurate, like where this landed. And you can see like it had to flip back over into the new year and kind of come back and climb back over these ranges. So the next time that this comes back and clears, it should have a bit of a movement back to there. I never measured this, but I was curious to see if the range, I think once it starts getting close to the differential in range being over that 80 points, so like let's say off here, what was it, that 83.9? So let's see, 83.9. Kind of like close to here. That's when you could start seeing some better structure breaks or clearance breaks. 83.9. It should be pretty close to here. Do you see that? So that tells me that when and if they come back and break, they should have, they could maybe take it out slightly based on these variables right here, maybe by like 2 points. Does that make sense? Like in terms of like the closing price on the 5th of January, and then these open closing prices right here. Like you can just kind of look at the range differential there. And that would make sense because that's probably what they failed to close it by on those days. So just some insight on gold that I want to share. Let's go back to ES. So ES, we had some very, very specific conditions. Do you guys want to go over this like condition by condition, or how do you guys want to do this? I feel like this was pretty straightforward in terms of how it traded, especially in terms of like our 346 point ranges, but it's up to you guys. I'll give you guys the choice on how you guys want to cover this, and I don't want to take too long on it, but we do have some odds for highs to be tested today, so I wanted to kind of get to that before 3 o'clock. The most base theory here was the fact that they kind of took this back over 128, 132 points. And our goal was for them to get this back 173 points above. So one thing I noticed yesterday, thank you guys for the subs, I wanted them to break 173 points. That was what I had written in the report. So this area around here, close to 4.3, 4.4, 4.5, that there was a lot of confluence based off those 6.771, 6.772 lows. We were like just slightly beneath that. That was one of the first things I wanted to copy. Actually, let me copy link because someone complained about copying images. That way you guys can go back in and so 172 point range. So one of the conditions for the 6 today that I had mentally prepared myself for is I wanted to open just a tiny bit higher. Okay? Are you guys with me? So this was the 173 point break. I just did it again. I'm so sorry. Hold on. Copy link. Okay. So do you guys understand where we opened today was 173 points off lows? Okay. This gives us odds for what? And the only reason I care about this low here is because this is our calculated low. It's not a random number that we're just grabbing from that day. First off, it's our December flip, but this was also our 256 point sustainment, okay, off these areas here. This is also the net differential of 343, 346 points. And they kind of went just a bit over right here, okay, by like 2-3 points. I would have preferred that they held closer to like 6.8, 7.1, but that's okay because off of highs or high range. Kind of the same thing, like they still opened and closed above 173 points. And if you pay attention here, like this is where they came back and cleared that off the previous high. So you see how there's a lot of confluence around like these ranges in here. And then when measuring down back to like 256, it would take us back to our 6696, 98. This is kind of the risk area that we were looking at. So we're going to measure off there too. In terms of measuring back on the upside. I don't know if you guys can see that. Kind of similar, like where you see how 7.1, 6.8 would have been a little bit better. So it wasn't too bad, but there was a little bit of a failure there. And if you're looking at this from these specific ranges on those dates, like 6693, 6696, 6697, okay? These are very close to being like those 256 point ranges. So for real time open today, I would have preferred that they would have taken this back up at least over that 695253, which would have been aligned with previous all-time highs. Okay, and now we'd be looking to see if they can finally, you know, break those 322 to 346 point ranges. If we're looking at it from a low to high range from here, the 173 point interval today implies that they could be on their way for what? These are really calculated spots, guys. Everything is in the report from a few weeks ago, but pay attention to this. I want to show you guys something. 702750, that's our 256 point range. It's also a really calculated core break. Okay. This is just in the future if they pushed off here, because breaking 173 points implies that we could get a 346 point break. So we won't focus on this too much right now, but at least that way you can be prepared if and when that happens. What's something else that you guys noticed that stood out this week so far? So we've already broken more than 88 points here, correct? Our 88 point break would have taken us back to the zone, back over 9798. Okay, that really stood out to me. This is off the lows. So 88 point break. What else really stood out? If we come back and clear off these lows, this is off the report, and we test 7K, we'd be breaking that 132 to 133 point range, correct? We basically stalled 128 points here. Do you see it? So these lows are really calculated. Okay, here's a very, 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 very important question if you guys were paying attention. Who was paying attention here? Let's see. I haven't streamed in a while, so. How can we help mitigate this risk? Okay, so for instance, back down in here, okay, this was 341. Okay, we would have preferred to have held maybe closer to 343, 346. Let's just go with 346 so it's easier, and it's 7-1 because 7-1's a core level. Okay, we didn't do that. Okay, so this would have been 346 points in range. We breached just slightly, okay? But back down in here, we had room down to 6518, 6522, okay? Do you guys notice a similar pattern here? I need you guys to pay really close attention because this is really important. Okay, back in here, they breached just slightly. Not by much, but let's say by like a few points. Whatever the differential is between here and let's just go with 7-1, okay? So let's go 4.25 points, okay? Everyone's on the same page? This was a breach beneath, okay? We still could have gone a bit lower to 5.8 and it would have probably still been okay, but it would have been more ideal to hold closer to like 6.871. So we have about a 4 to 5 point differential, okay? Back down in here, however, we actually had room back here down to, we could have actually gone all the way down to 12. That was my max range back then. 18. Okay, or 2.2 in 20 area. What do you guys notice with this downside right here? Do you see it? Thank you, Murray. Okay, this downside right here, thank you so much. This was offset risk, okay? Do you see how they essentially kind of mitigated the risk on this side? So it kind of can help your odds in terms of this breaching a tiny, tiny bit. Do you see this being the net differential right here? Because in the past when we looked at this, we actually had odds of holding a little bit lower than that. If you go back and kind of review, I think you're going to have to do like the adjusted versus unadjusted because this isn't factoring in like the contract rollover. But I do remember back in here we had room to 5.512, 5.518. Let me find the report that it's in and I can copy paste it, but 25. And that was also a 50% range. Okay. sending these in the wrong? Oh, 60. I'm typing. Oh my god, I'm typing 55. Okay. I'm just going to copy paste these so you guys can remember that these were the ranges, okay? This has always been a critical support, okay? In the past, we use this because this is the area that would have, I'm just copying and pasting. This is from back in October, but that way you guys can, okay? So in the past, we had a bit of an advantage. Do you guys agree? Even when they came back and tested 6.6, back in here, 6625, we could have actually gone down to 6620, 22 back here, and it probably would have been okay. So this is the first time that they actually did take it a tiny bit lower than maybe we would have wanted to. Okay, not by too much, but just by a little bit. And then even back in here, like maybe holding closer to like 8.1, okay, would have been fine because that would have been our 256 point range. Like 8.1 would have been a little bit of a better structural hold. But the reason why that's okay is because if you measure it off the downside, like risk that we could still afford. Do you see what I'm saying, you guys? I know this is, I want to cover this because this is so important to understand, like odds of continuation, okay? We still had odds of holding 6.8 because that would have been measured off our max downside risk, which was close to 65.12. Is everyone on the same page? This is the reason why, like, they still could bring this back above, close it above, and it's still okay. So it's kind of like the market was at a bull advantage here because they held a bit higher, which gave them basically a buffer that they could use right here, right? Or kind of like some protection in case the downside gets breached or whatever that case is, and that kind of helped us sustain. Anyway, 7.1 was still a really good hold, and it's still off those 256 point ranges, but it's just so that you're aware of why these areas here could have some odds of continuation. And if you measure these properly, they should come back and all be linked to that 70.28, 70.27, whatever those ranges are, okay? Even if you're measuring it on both ends. So that's going to be a 256 point break from these intervals right here. What's half of 256? And these lows have to be aligned with that, okay? This January 2nd low is so important. And it's so calculated, and that's our yearly opening low. What's half of 256? Okay, 128. If we break 128 points, do we take out all-time highs? Yes, okay? So what's something that market makers could do? Since this time, odds weren't entirely favorable for bulls since they had this little breach. What would they have to do to offset this breach that they had down here? Okay, so back in here, they had an advantage. Over here, they utilized that advantage, okay? They're still doing kind of the same thing right here. Remember, this is also 343 points right here, 341, so this is extremely calculated. What would they have to do right now? Yeah, maybe try breaking, once we do break all-time highs, hopefully break it by those offsets. Does that make sense, you guys? Because that could help offset this little tiny bit of risk that we had right here. So I was thinking that if and when we come and take out highs, and we have to be so precise about this. I know it sounds stupid, but it is important, especially since it's the 6th. The 6th was my first flip for 2026, so those first flips really matter, okay? So I was thinking that maybe in the inverse, we probably have to try maybe taking out highs by, you know, those intervals, like close to here. Like, and I was thinking if 128 points off these lows, and sorry if I'm going too fast, this is recorded if you guys need to go back and rewatch this, but I was thinking if this is the 128 points off these lows, then maybe we want to break at least 4.25 above this, okay? So, and I haven't streamed in a while, so I'm trying to make sure that I think that's right? Oops. Okay. Whereas if we look at like the total like utilization that we could use, it's close to that 12, 13 point ratio that we've been talking about for a while now. Remember how I said they've been working like with those 13 points, 13 points? I have this on a report from a few weeks back. You might have to go back and read it, but I talked about this maybe like 4 weeks ago where like we had those 13 points recycled on each end, and that's kind of what kept us at an advantage and then a disadvantage, and then they kind of kept doing the same thing. If we had something like this occur, okay, that's where we could maybe get stalled in like these neutral offsets. Okay, and that's when neutral ranges could come back and be in play. So those are kind of the areas that I'm thinking that they could start working with if and when we do break these ranges in terms of highs. Remember how I said too that whenever market has been breaking 200 or 100 like 28 points, it doesn't always break directly to 256. Remember how we said it kind of breaks to like 227, 226. Do you guys remember this? I also measured this too last time too. So from the downside, this made sense, like measuring off the highs. This was 178, right? If you go 178.25, this was off previous all-time highs, 178.25, subtract 4.25. That'd get you 174. Okay, so that was also some risk right here. You can kind of see it. It's quite visible, not just off the lows, but even off the highs. Okay, hence I figured this was so important that today they come back and break that same sort of interval. Do you see that? 174. Okay, the differential between here and here. Isn't that cool? Like that's kind of what it breached. So this has been a consistent pattern that I've noticed when they've been breaking and moving in these offsets. And even when they've been breaking upside, I've noticed that, okay, back in here when they broke off lows, they broke exactly 256 points, okay? But initially when they broke, this was the 173 point ratio off these 9.6. Do you see it? 171, 172. It's very similar to what they did right here. Like, look. They're very, very similar ratios. And those are half of 346. Or like just beneath half of 346. But I did notice that they have been moving in those 220 to 230 point ratios. If you go back in Discord and type that, I think we talked about it end of December. And I'm pretty sure the ratios were 226. I'm like 99% sure. Here it is. I found it. Okay. Oh, wow. This is insane. You guys, this is... Can you guys see the screen? Look at that. This is how I know that this is so calculated. Look at this. 22750 is the common denominator. Isn't that wild? So I know this is going overboard, but I think it's important that we have this plan from now. So that is the confluence area. So 227, maybe if they do half the range, it'll get you close to like 113. And that's why they could stall 6885. And I think they did do that the last time. This is a really calculated theory using like this core to core ratios, okay? So 227.5. Look at how crazy this is. That is actually nuts, okay? Look. 227.5. If they did that offset break, it's 227.5. That's the same thing as measuring 227.5 points off those lows. It would also get you 6999. That's also that 4.25 offset off highs, which is also 132 to 133 points, which is half of 256, which in theory will get us that 7028. So I'm going to be firm that conditions on breaking 6994, we have to hit 6998, 6999. Okay, is everyone on the same page? hitting that range is what can get us 7,028. Happy New Year. So, yeah, this is that 227 coming back into play once again. Let me copy link. And for whoever wants to really try studying that and doing your own range theory on your own time, you can go ahead. But I noticed that was the case back down here. So, and that usually, if that's the case, it's usually when they don't break an extra 33 to 34 points, right? Or the 22 to 23 point ranges. Because if they were to break 33 points or 32 points, it'd be 70-32. And if they were to break the full 256 points, it would be 70-20, what is it? 70-27, 70-28. Whereas if they break off the more preferred range, that would get you close to that 70. What is that? 76,775.50. It should get you pretty close to that 70-32-31 area right here, which is the top of the zone. How cool is that? Especially if you're breaking off that 6-7-8-1. Okay. And I didn't actually look at this, but if you look at maybe the closing opening ratios here, kind of the same theory. Okay, like had they maybe broke off 7-8, that would have been that 226 point range. Look how close that is from open to close. And I know we went back and measured off open to close on these, but I just want to show you guys real quick and then we'll wrap this up, okay? So the 256 off 8-1. I just want to see this because I know 8-1 was really calculated. And don't forget those were our calculated open close for the 25th, 26th, okay? Especially when using that 4-day time frame. So if we look at this off 8-1, that's that 70-37, 70-38 range. If they did something similar in terms of pushing that to like that, oh, you know what? Remember when they pushed 261 on that inverse too? Like back here? I actually remember this because this is when we measured this from August down. Remember that? 260? That's probably that 4-point range too. That's crazy. So that means we have pretty decent odds of getting to the top of the zone, or at least trying to get into the channel based on these intervals here. Let me just delete this so it's kind of a little bit more clear to see. But I think you guys you're pretty aware of how these increments are coming into play, and there's confluence on every single end, right? From 256, 128, 173, 346, everyone's on the same page that these would be the same types of range differentials. And then this is basically the difference of like the 33 to 32 points if you're measuring from here, like off a 9-9 break. This should get you that 3-2-3-3. It's the same thing. This is on the weekly report too that I had put in there. So our weekly plat I think stays the same. I don't think anything changes. One of the conditions for the week was if we hit core areas as early as the 6th, so that would be today, then we have odds of tagging 7K, and we also have odds of potentially getting, that was the condition if we wanted to get to 7K retest, right? So technically it's 6999 to 6.01, but we can just say 7K since it's easier. But the condition, I think, to get 70-28 test this week, or 70-32. What do you guys think? I think in order for that to be the case this week, the condition would be that the 6 would have to break the zone and try testing 7K as early as today. How much time do we have left? 45 minutes? I think that's possible. In terms of just overall base price action this week, it was pretty straightforward. When I started the session on Sunday, I said that we want to just kind of nest in the neutral box, which they did do. Come back and retest 69.22.28. This was my first condition to start the week. Okay, is to test these areas in here and try clearing 3-2 by open on Monday. Okay, so Monday opening range, you can see how nicely they held above 69.05, 69.01. Do you guys see this? Into Sunday's session, this is the neutral zone. I'm just doing a recap of this. Don't forget that these neutral areas are also aligned with core ranges, just in case you forgot. So 69.05.06 is extremely calculated. I did put it back on the report in case you forgot why those areas were calculated, because they're correlated to core ratios, so don't forget. So holding those areas, okay, overnight on Sunday, this was so important to get this kind of PA, okay, to get core PA, which means getting to 69.20s, getting to 69.70s and 80s, to give us an odd of getting those 70.20s this week. And then that's what we had pressure into last time. We also looked at how those, like in the past, before we ever tested, those areas are linked with, okay. Last time people looked at that 69.06 area as being a bearish open, okay? So I wanted to make sure you guys, when they gapped us up like 2 weeks back, that was a very bullish open, okay? That was a very calculated open that week. Go back and read the report from 3 weeks ago and then you'll know why. And I streamed that one live. It's probably one of the last streams that we did. So them holding this meets those conditions, okay? They then brought it back 6922, and if you noticed right at open that day, this is the opening, okay, on Monday. Do you guys see how they cleared the zone right here? Look at this. Look at the open. Look at where they cleared right at open. That's not a coincidence. 69.34 clearance right at open. That's a break into the channel, okay? So our odds were pretty good even just to start the week. And then notice that they held above 3334 right here. So this was a channel hold. Our first targets off the report was that 5.8. Okay, and then that 6.4, 6.6. Yesterday's PA, I think, was pretty straightforward. We didn't really have high odds of core areas for Monday, but we did have odds of getting 5.4, 5.8, which they did. One of the conditions I mentioned yesterday, and I said if they don't hold here, they're not going to clear, okay? That is what can help odds in trying to sustain above and get to those 70s and 80s, okay? What's something that they did do today that they failed to do yesterday? So notice here when I was like, okay, they can try getting 6.6 if they can hold above this area right here. Specifically this area in here. This is kind of like the green light, okay? Had we held this area into the close yesterday or into mid-session, pay attention how this started failing during mid-session around 12:30, 1 o'clock, 1:15. Do you see this? This kind of set the tone. This is how I knew that we were stuck yesterday. And I mentioned that when mid-session occurred that they're probably going to keep this stuck. Like, I don't think that they're going to, I think they kind of capped range and they're probably just going to keep this stuck. Okay. I also thought it was important yesterday that you guys were aware that if they had, Okay, this is kind of them keeping it stuck because of failing. Okay, if they had stayed stuck in the neutral zone overnight and failed to take out 6922, 6928, we would have maybe got stuck in the channel or stayed stuck in the zone. Do you see how that would have limited, this would have limited odds of even trying to get back over 6988 this week? Okay, that would have probably kept us closer to like the 6958 to 64 being max range. Does that make sense? Like, had they not done this yesterday, like let's say that they did something like this and they stayed stuck here and they didn't clear here. Okay, let's say they didn't clear here at open. Okay, and they stayed stuck in this range. That would have given us one risk of coming back to back test basically 8892. Okay, and that would have kept us zone bound to channel bound. Doesn't mean that we can't get over 2832, but it would have probably limited our range. This range on the upside would have probably been recycled to downside. It's good to understand different scenarios. I know that this didn't happen, but it's important to understand if it did, okay? Like, even though we wanted this to happen, it's good to see two ends of the trade, right? This is how they could have maybe ended up overnight, maybe in the channel. Do you see this? And that's what could have maybe limited our odds or range this week. Maybe closer to the 4-8, okay? And then that is what maybe could have had us stuck and delayed, right? And not having any odds of getting to the channel, or maybe limiting our range to being 5-8, 6-4 this week with tiny odds of tagging those core areas to 7-1, 7-8. So this is a scenario if they hadn't done that, okay? It's really, and you can go in and measure the range yourself if you want to, like in terms of, it should be pretty similar in terms of both upside and downside. Like if they hadn't done that, if they hadn't cleared that, it should be the same thing. Like you could just use 33, 34 points. I feel like that's probably going to be like the easiest way of looking at this from those highs. Do you see that? Okay. So if you would have done something like that and not broke 2-2, do you see how that could have brought you back down to 88? Okay. If you use like 34 point variables on this. And I think yesterday's overall range for the session was capped at 34 points. So it's just one reason why you could use that. But I'm just giving you guys an idea. And that's how you can stay stuck range bound or channel to zone bound. Because it is good that you understand when and why. So then if you measure off here, do you see how they could have limited range to maybe 5-4, 5-8? 6-6. Do you see it? Okay, so thankfully that didn't happen, and we actually had really constructive price action. And I bet if you measure the same thing, those 33, 34 point ranges off these, it should give you 6999 off 6-6. Isn't that crazy? So, which we know how calculated 6999 is because we just talked about it for an hour. So PA this week was very constructive. The one condition that they did do today that they failed to do yesterday, which is why our odds were way more favorable, is what? What's the one thing that they didn't do yesterday that they did today? And you can see overnight. So yesterday they brought this back down. We ended up getting a close at 6943, which like we said, those were the 173 point ranges. It might be good to note that, just so that you're aware of why that area was calculated for that close, okay? Around this 4 area, okay? What's one thing that they did do? Actually, two things that they did do. There's two things that they did that really helped our conditions today. One of them was an overnight condition, which I had set. Another one is a real-time condition. What were they? And the reason I'm covering all of this is because I knew that range would be limited for the last hour because it's constricted to 9899. So this isn't really going anywhere. So this is a good opportunity to study in real time. What are two conditions that we met that allowed us to not only break 6971, 7881, but also gave us an odd of getting a 6988, 6994 retest? Come on, guys. By the way, anyone still swinging the bank trades into the new year? These have been pretty constructive, specifically Bank of America and Citigroup, but these ones had a really strong start into the year. If anyone still has those January calls. Don't make me pick on people, guys. I'll start picking out names. I can tell who's online or who's listening or who's watching. What are two conditions that we failed to meet yesterday during mid-session that we met in real time today? And this is so important that you guys are paying attention here, because this is one of the reasons why we haven't broken highs yet, by the way. Well, yeah, one thing that we did do last night is we held 69.32.33. So we had a channel hold last night. Right here, right? So hold of channel, this was good. They did breach it just slightly, not by much, but by a little tiny bit. And I feel like this could be partially what's impacting this, okay? And it's not by much, but just like a little tiny bit, okay? Let's just say like close to like 1.75 to 2.25 points. There is that tiny breach. Failed to break the means. Yeah, well, yesterday they also failed to hold above 4952, so that was something that stood out. Yeah, so, and today in real time, they did a really good job. Let's put this on like a 4-minute. They did a really good job today of holding that range. Do you guys agree? In real time, like holding above 49, 51, 52. So they held really nicely above the channel, even though off opening range, okay, even though off opening range, this was the open right here, they opened in the channel, okay, they did close above. So that was, this was progressive. I would say that this was good, okay, because these are coming back and meeting those 173, 256 point ranges from the past that we talked about, like the previous all-time highs, which we already know 69, 52, 53 are calculated. So I think that this was a really good hold, and this was a really good negation within the first 15 minutes of open. Do you see this? Like this stick right here, this was super strong. And then even before 10 o'clock, they broke 6.6. So these were really good conditions to have within that first 15 to 30 minutes. Could this be what's potentially stalling us though? What do you guys think? It's not a huge breach, but could this be what's potentially stalling us? Top of the channel is close to 4950, 4975, okay? Even though they had a really good structural hold right here, okay, this could be partially why they maybe stalled the 8.1, 8.2 area here. It could also be the same reason they didn't get to 8.3, 8.4. Okay, do you see that? I think if they would have hit 8.1 early on, this would have been the case. What else? Yeah, well, it's a slight breach. It was still okay because it still held above 4.443, which we already discussed as being that 173 point. Let me just write this down as a 173 point intervals. Okay, it's just so that you guys are not forgetting, because I feel like you guys forget pretty easily. Okay, off 6.7 Okay, so they still held those intervals, which was okay, but I feel like had they not breached beneath the channel in real time today, we probably would have already tagged those ranges. Does that make sense? And this is probably what's limiting us from retesting those highs right now. Because, like, if you're looking at this, like, a lot of these should be pretty close to, like, the 6992, 93, okay? Especially off the 4.25 ranges, which we already know are really calculated. So, do you see this? What's our previous all-time high? This is basically just the breach in real time today of the channel. Okay? And it's not awful. It was still a good hold because they came back and held it right here. And they still tagged 7-1 at least, okay? Back in here. Do you see that? So, could today's highs be a very calculated max range for the real-time session? They still held here, okay, before mid-session, so that was good. They broke these areas during mid-session, which was good. Like, look at the time of day that they broke this. Okay. But the fact that they breached a tiny, tiny bit, this could be what is limiting us. If we measure off, like, those really calculated 4-3, 4-4 areas, probably have some alignment close to, like, 9-6. If we measure off those previous all-time highs, that should give alignment close to that 7K. And again, that's 6999. So, had we held above 6950 in real time today, I think we would have had, or even open there, we would have had really good odds of tagging 7K already and retesting that previous all-time high. So that doesn't mean that we don't have odds to do it maybe after the bell or into, like, the final minutes of the close, considering they held this during mid-session. So, like, bulls do have some favorable odds into second half, but the opening range and the real-time lows put us at a slight disadvantage. Okay? Does everyone understand that concept? And it's exactly 4.25 range. Something else that I was looking at too is to see this afternoon after 3 o'clock, pay attention, this is insane, if they would keep us stuck within a 4.25 range. And they have. Isn't that insane? Look at the range they've kept us stuck since 3. Exactly 4.25 points, because market makers know that that is the capped range. Isn't that insane? This is why I wanted to stream the last hour, because I'm like, we probably have very small range based on how they opened, where they opened, how they did overnight. Like, this is insane. So we're kind of just stuck right now in a 4.25 range. You'll get range once you break either end. So as soon as you come back and take out, and that's actually crazy at this 6986. Okay, that's what could give you odds of getting back to these core ranges, pinning here, right? It's like these areas in here, right? Or back to these areas in here. But nonetheless, I think that they've compressed. Thanks, Euro. You know what's funny is I wanted to be a teacher when I was a kid, and then I don't know why I never took that path. But okay, so now that we're approaching the final half hour of the day, let's do some polls, because my max range for today's session was 6999. I still think that we could tag it in real time, maybe, if they can clear this probably before the final 15. Like, and but when I say clear this, I mean clear 6994.75. So max range for real time session. Highs are in 6993, 6995, 699675 to 6998, 6999 to 7K, 7K plus. Okay, I'll give you guys 5 minutes to vote on that. This is a really good 336 stick, by the way. See if 336 can break out of that 4.25. 336 is always a flip. That's the imbalance prints. And sorry, I know this is kind of a boring session, but I just felt like this is a good opportunity to at least learn and study this. I haven't actually measured the ranges from overnight, but I think that this is probably going to be a 44-point range here. Oh, wow, it is. That's exactly 44 points from that afternoon low. That's pretty crazy too. So then what about from the overnight lows? Overnight lows, that would be 63 points. So if they clear to 7K, that's 66, 67 points, 68 points. That's insane. 68 points, guys, off overnight lows is also 6999. So the confluence is definitely there. Okay. And then I would imagine that off of those actual session open, session close, they should be linked with these neutral areas that we talked about. I did mention this week too that I'm going to go back to using those intervals just because of the neutral opening range. I do want to see the 44-point ranges off these afternoon holds. They would be aligned with those previous all-time highs. And then off today's open, we've basically been holding 33, 34 points here. And okay, we're hitting 44 points off today's real-time open, guys. So this would be a 44-point break off real-time open. There's a lot of confluence around these neutral zones for this week. I don't know if any of you guys also traded any of the material names. I did talk about those in the report as some good alternatives for this week in case you didn't want to trade ES or you want to trade something else. And guess what sector is leading this week? So lots of different names you could have traded. Alcoa has been a good one. Obviously AG if you wanted to trade silver. Silver has been moving nicely too, and nickel, copper. Those have all been really good sectors to trade. I mean, my usual go-to for any of those is usually the same plays like AG or AA or CLF or FCX. But you could have done some futures too. FCX actually hasn't moved as much in real time, but it's been a really good swing trade. Like if you took this long into Monday. Alcoa has been a really good one. Might maybe keep an eye on that one too. And what about with all the lumber talk, you know, maybe some lumber trades would be some good ones too for like wood. Yeah, we can look at silver in a bit. I covered silver last month, but we'll look at it in a bit because I had some I wanted to see what ES did here by 45. Just because I have a few contracts left into the close. Oh, that's a good play. FCX leaps. $69.96.98. Okay, that's what I was thinking too. We'll see if we trigger that. Let's see here, into the close. So my thoughts are if they can clear this 90.5 by that 345 window, then we do have pretty decent odds. Obviously, we'd have to clear that 69.94.75. Probably, technically, even if we don't clear it by 350, it's fine, but it would be better if they did by like 350. Otherwise, it would roll that window into that 354, 350, 355 period, unless they really want to just pin the close at 354 or 359, sorry. So let's see. Yeah, I never checked NQ yet, but we'll see. I love when the week just goes as planned. Like, and things just break nicely. Like, this has been a pretty straightforward week so far. Yeah, I did break above, but still no closing sticks above here, so we'll see. We're gonna obviously watch the 348 window too, prior to these prints. So if they fail to get over these areas, on the downside, it would be, I would say, maybe just staying zone bound, like close to 6998 or 6988, sorry. Or I don't think we have huge risk of getting back to 7178, to be honest, because I feel like if they wanted to do that, they wouldn't have taken it to the zone in the first place. They'd probably just compress range and then break after the close. Does that make sense? So I don't even think that there's even odds of getting back here anyway into the close. Like, I feel like if they don't do this in real time, they would probably just wait until after the close. So I do feel like that's our confined range, unless we have some news or something that drops. I think that they have pretty decent odds of holding these 80s into the final 10 minutes or 15. But we'll see what they do here off the 45 and 4-8 period. Is this that 5? No, it's still 4.25. So what about, I'm just looking to see off the 3 p.m. opening stick. 9-1, 9-2. Oops. Did this help you guys this afternoon, at least in terms of like not over trading? Like, it seemed pretty obvious that range was probably done for the day, but how did you guys do today anyway? I feel like this was a very, even if you're just using base theory approach, this was a really good channel hold. Like, even if you're just using the basic 100-point theory, this was a perfect hold of the channel right here. And it gave you so much time to go long in here. If you had missed that opening break, obviously off open. Or if you didn't buy calls for the 6th, which I had mentioned doing yesterday, that you could just buy some calls for the 6th because the 6th had better odds anyway. So far they're stalling range, which tells me that they probably want to keep this pretty limited until the close. They did break ahead of 345 though, which is good. So we'll kind of watch this window between 348 and 350. Need to get those viewers up for the stream again. I think this is a pretty important window right here though. Like between that 348, 349, like before 350, even though technically they can wait till 350, I think at least retesting this in the next minute or two is still important, because otherwise that could really limit the range or odds that we have for real time today. We did have odds until the close, which is why I figured they could just wait until literally the final minute if they wanted to, but I'm not too concerned since they at least broke above, but not closing above is what puts us at risk of like retesting this, but usually you can get an idea too on the 30-second intervals, like once they flip these candles over. The area of confluence too on the breaks of these was close to like 9.2. See if they can clear within the first 30 seconds. I'm just going to mark that 9.2 area too, because there was a lot of confluence up here. There it is. Okay. This was the first like major overhead I found, was close to 917592. So far they're stalling 9150. And that did close above in the first 30 seconds, so that's good. And we'll see if they can keep this over here. I don't know if they can trigger 9.2 on this stick, but at least closing over 90.50 can help odds. Oh, they closed exactly at 90.50. Okay. They're definitely constraining this for end of day. Like I was saying earlier too, I feel like if they don't clear buy that 354, 355, then they're probably going to wait till after the close today to try testing those ranges. I'm not surprised by this PA though. This is pretty much what I expected them to do if they didn't come back and clear before 3. Let's see what they do here for, let me reset this to 91.75. We could, let's set an alert too actually for 6, 9, 8, 7. What do you guys think real quick here before 354, 355? Give me a number into the close. These odds are pretty 50-50 because they still took out 36990.5 and closed above at 350, but they failed to clear that very first 1.75 to 2.25 overhead near 917592. I would say that if they don't clear 6992 by this 355 point in time, then they're going to keep this a little bit constricted beneath highs. If they're able to clear by 355, then I think that they still have some odds of taking out 6994.75 and testing that 9899, maybe right at close. Give me a point, guys. Come on. This is just for fun. There's no right or wrong. I'm giving you guys an idea of how to predict a closing point, which is really important, I think. In terms of how to properly read price action. And also set conditions for time. So we'll pay attention to the 30-second mark on the 55 stick because that is really important. Because I feel like if they constrain the 55 stick, then they're really limiting this for real time. And like I said, I don't think risk is super high for like major downside into the close. I just feel like if they don't break during these intervals here, then this is just going to stay stuck until after the bell. But we'll see if 55 can break. Oh, it's trying. If it gets back over 69.90, 50 close, it could give it an odd for that 356. Where do they tag that? Did they tag 75? No. They still tagged 50. Had they cleared up within that last 5 seconds, like even that 0.25 stall, okay, this probably would have been enough to at least get it back up to 9425. I would bet anything that the range on this stick is probably similar in terms of previous all-time highs. So far 3 points. Yeah, that's pretty close. Do you see that? And that would make sense too because they triggered 91.50 versus 91.75. Because 3 points off the 9175 would take you back to all-time highs. Off that 9475. This is a pretty calculated close. What do you guys think then? You think that they're going to keep this stuck for real time? You think that they'll leave the final odd for like 950 or 358, 359? So it's pretty clear that stalling beneath 9175.92 is limiting odds. I'd say that the only way probable of taking out the high is if they can close this above that 90.5 again to give odds for the final like minute of the day or something. But if they can't do that, then those odds are pretty low. And in order for them to even try getting an odd of 9.4 based off the 5.6 reduction stick, they'd have to get a breaking point of 91.75 or 92. Otherwise, they'll keep this stuck right at the zone and break after the bell. Odds for today, though, were like right at 4, which is why I was thinking that they might stay stuck, but we'll see. Quickly, how many of you guys think they'll take out highs in real time in the final minute? How many here think that they're going to wait till after the close? So we already know the conditions for 58. I would say that they'd have to come back, close over here, clear here for that to be the case, but what do you guys think? After? Well, I think if the 58 stick didn't get those clearing breaks over 90.5, it's going to be pretty hard to do it in real time. But I was thinking 4, but we'll see. I'm not always right. I can be wrong sometimes, but it seemed like odds were higher for 4 o'clock. But that being said, I think that they'd have to try triggering 91.75 or 92 in real time. Does that make sense? So like they might not get like the full break, but for that to even be an odd, I feel like they'd have to at least try to trigger like 91 or even get that closing point near that 90.5 or something. How many seconds are left? 15. This is a pretty calculated close right at the zone. That's really accurate for downside risk too. I didn't think that they could take it back beneath 8.6 and look at exactly where they held. 86.25 hold right at 4. That means they're testing both ends of the trade here. We'll see if 4 o'clock can clear and close. I think this needs back over at least 90.5 in order for that to be the case. That's quite a lot of movement that this needs now, though, in order for that to get back over 9.2. Still a really good move, though, on ES today. We'll see where they end up closing after the close, but I think that we're still confined or restricted to these ranges for the last hour here. Silver, last time I looked at silver, I don't remember what it was, but I'm trying to see if I can find my silver chart. I don't know what template I put it on. I don't remember if it was on, maybe it might have been on this one. Yes. Who wanted to look at silver? Let me see if I can remember my increments on silver. I think this one, let me see. Pretty sure on silver it's the same sort of idea with like us heading into like the third bar here, except for silver. I'm pretty sure silver started on a 9-month range. Okay, so this can obviously have that continuation through October. Same sort of idea. And then on the annual chart, you can't really see it, but it kind of looks like there's some volatility. But if you look at it from like an 11-month range, I think what the condition was, we had to open the year above this 71.98. Pretty sure that's what we talked about. So do you see this? Look at where they started the year. So 71.98 was a really calculated spot on this. And then from there, you could either use the fibs or you could just use the manual ranges that we calculated. I think manual range on this, we had used... There's two, you could use either like the downside that they had previously, which was 37.2. You could use it on the inverse up, or you could just use the fib range too. So I think that was this downside range right here. From an open to close perspective, it was 20, hold on. It was 18 to 19 points. But if we use 37.2, this was that 29. Do you see it? From this range here. Do you see that? This is kind of where they align pretty close with the fibs, which is why I'm saying you could use either or. But I mostly wanted to see once they break like that 37-point range, which is close to here. Do you see that? This is where, and look at where it flagged. This was a really nice daily 3-bar. Okay, so, and all I've been doing is just measuring. I haven't updated my chart on this though, but you can just measure manually if you want, or you can apply those fibs on here. So I think it's close to like this area in here, off our 3-bar, okay, or off the high. Do you see that? So well, let's just use exact ranges. Hold on, it was 37.20, so close to here. Coordinates. Okay, close to this area here, okay? 72. And I figured we could maybe see very similar type range. Like you see how like they moved in close to increments of like 8 points on that first initial break. They could probably do something very similar on this here, but that was the condition for the yearly close, is to try getting over this range in here. So that basically put this at an odd for silver to have another 37-point break on the year, okay? Which I know sounds like a lot, but this is basically what can get silver to $100. And if you want, you can just use like the ranges that we calculated off of, because they should be pretty aligned with the $100 marks, but they're just like just over 100. But I think the very first ratio that I had measured was off like that 65, 66, whatever it was close to like 103. But that's kind of the theory of the trade. And then if you wanted to use kind of just like the base approach, you could just use these fibs. And we were just measuring off monthly ratios, which so far have worked pretty good, because like you see how like November 28th and December 1st cleared right here, and then same with January. You could still use those if you wanted to, but You can also kind of just measure, like you see the downside that like with this is really close to that 9-point range that we were talking about. That's why I was thinking like it might end up being something very similar. Like, so if we look at this previous high range, you see that 8.16. Okay, from lows 9.25. Do you see that? I was thinking that we could, on the shorter frames, we could maybe use those ranges. So let's see. 9.25 could be like maybe the range that has to break once they clear or something, like this area in here. Do you see that? So you could use those ranges just like in short. And I think that they work pretty well with these ranges that we're breaking off of. Like even if you measure off like the actual flips, like on the first, do you see this? Like as soon as they break like those 9-point intervals, you get this really good PA. Like they're close to like the 8.9 exact ranges that we're talking about here. Do you see that? So those are the increments I was using for silver. Hence why you're like right now there could be some overhead here, right? But I feel like so far they've expanded into the year, because like if you measure off like the exact ratios right here to these candles right here, do you see how you're already hitting like 9.3? Let me just delete this so it's easier to see. Do you see that? That's pretty close to our ratios. So sometimes it's easier to just like measure each one manually, but like the most important area is obviously going to be off this 72 spot. So this is the really big spot that I'm thinking they'd have to try to close and clear, which it looks like they're trying to do that today. So silver could be a very, very, very high watch trade heading into tomorrow, because this is now clearing like that 9-point range here. And then obviously these could be like the intervals that we could look for. So do you see that? Even if you're measuring like off the annual highs for 2025, do you see how like from this range in here, okay, off like the closing points, we're probably going to have a lot of, so I think right here when they broke about half, okay, like 4.5, do you see that? So another way you can think of it is like, and that's off closing price. That's not off highs. So that's why you could see maybe some moves to like 88 or something if they break that. Off highs, if you're to get like the full range break off highs, like this is going to be close to that 9 points or whatever, you would maybe see some range breaks to like 92, right? This is just on an initial structure break. And it's really important to note that too, because like this has been breaking. The difference with gold and silver is like silver has been breaking a lot too, but this one has some structures as early as like a 6-month range, right? So 1, 2, 3, 4, this flips in July. So you can see like we have a lot of fourth bars that don't flip until like mid-year, so it could be another reason why they kind of keep this rolling. I didn't measure this bar right here, but I would assume that this is one that expanded that range. Yeah, it did. From like a high to low. So what you could assume is when they come and break those highs, it might do the same thing on the upside. Okay, so those are just some ratios you could use on silver. If you want to use a fib euro on silver, I think one of the better ones to use, and I don't remember the one that I applied on here, but I think we had just gone ahead and pretty sure we just use the fibs off here. Or sometimes if you want to use like an exhaustion fib, you could use the one off like the previous like all-time high exhaustion candles. Like, do you see like this? You could use, I'm using the 11-month because of the structure on the 11-month, but if you wanted to just keep it simple and use the 12-month structure, you could. So like this structure right here, do you see that? See how like this is 26, 37 points, okay? If you want to use the fib on this, you could. Should get you pretty close to like that 1 point. I usually target 1.75, but whereas if you put it from the highs, it would get you those 93, 102, those targets that we were talking about. So you could use a fib too if you wanted to. But I feel like the easiest with this is even just measuring, you know, like off these highs. Like the most calculated areas on this are for sure off these previous high ranges, so which is very close to where we're sitting. Hence, these being really important areas for them to have cleared into 2025. Do you see that? These are not exact. This is just so that you have an idea of like what to use when you measure this. So clearing these ranges here, especially in the first month of the year, you see how that could give you like a mass odd of expanding. So there's a lot of overhead though around this 87, 85, 88 area. So we're going to be very cautious once we start approaching there. Maybe that could be like some headline news, some slight rest for like gold, silver. And if you look at it on a daily chart, it's a pretty clear clearance break into the last. Do you see that? Like this is a pretty clear break. And you could also measure your annual candle from like January, right? To see like this is, you see how they already broke more than that range there. So you could maybe assume that if and when they break, it could be the differential in 40, what is that? Hold on. 43.26 subtract 37. All right, so maybe you might get like a 6-point break or something, right? And then the overall, that's 74 points. If you multiply that by 2, and that's probably going to be your 102. Do you see that? Like 37 by 2. So that's why you could maybe look for these ranges here. And I didn't measure this, but I would imagine that, like, you see how they had like that exhaustion candle right here, and it netted close to like 13 to 14 points in range. It could be a very similar range and upside. It's probably going to be linked to this 101, 102. Okay. Flip dates for silver I haven't really looked at. Like I know on gold, I think gold we were watching 6-day intervals. I'm not really sure on silver, but we could see maybe, let's see, the 4 days flagging on silver, so that's really nice. So 4-day, I would start with that. 4-day has a really nice flag. This flips over on the 8th, so you'd want to take out the highs as early as tomorrow. So we could look at a 4-day flag on silver. 4-day flagging. And this works really well with ES too, because ES is also looking for a potential engulfing as early as tomorrow. So hence why I was thinking they could clear this overnight, or maybe keep it stuck, because all the engulfing odds for ES are for the 8th, which means that they'd have to break on the 7th. So that's why I thought maybe they just keep it stuck. But for silver, it seems like 4-day, 5-day. I want to see ones from these previous breaks. 8-day was really clean on silver for the 14th. I want to see the ones that, I'm pretty sure it's the 11-day like gold, but you could use the 10-day, but I think, okay, this one's a little bit different than gold. Maybe this 12 days not, or this 13 days not bad. You can kind of see it like reflag here, but I want to find a better structure that actually took out the highs. Hold on. Okay, this is a nice one. 18-day. This is a really good structure. 1, 2, 3, 4. This runs till month end. And this is valid because it, look at how it's based. Like you see how like this mid structure is based around these price points here. Okay. And each segment took out highs, and you're on your 3rd bar. So your 4th bar period comes between the 29th of January until end of February. So that could be the period where maybe they start seeing some slight exhaustion or something with or expansion. So my thoughts on this would be if silver can trigger here, let's say by month end and like close over these price points, I think our fourth bar could expand. Does that make sense? Because your fourth bar usually will exhaust, expand, or like stay sideways or whatever until a decision is made. But I would say closing over here, okay, would give you an odd of expanding. Tagging here but stalling would give you an odd of digesting. Failing here would give you an odd of exhausting. I think that's pretty straightforward. And then your base mass support on silver is that 72 to 74 range, with 87 to 88 being the current target overhead. ES, I think they might just keep it stuck until that that engulfing odds, which had better odds for tomorrow, since most of those structures flip on the 8th. But overnight conditions on ES, I want to see if they can just at least try sustaining, ideally over 6671, but it would be better if they could just hold 7881, to be honest with you. Then that would give us some better odds of tagging these areas tomorrow and hopefully getting a zone week to end the week into Friday. Are numbers still delayed, guys, for NFP this week? Do you guys know? I have to go, but anyway, let me know on Discord if you guys have an idea. I haven't checked that, but when I checked this weekend, it said that they were delayed. Let me see. So it still says delayed.